Einen schönen guten Morgen aus New Delhi nach Österreich, meine Damen und Herren. Nachdem alle unsere Sprecher englischsprachig sind, erlauben Sie mir jetzt, in das Englische zu wechseln. A very good afternoon to our participants and speakers in India. Ladies and gentlemen, we have presently 250 million bank accounts in India, and the number is growing by the minute. There are also presently 500 million mobile phone users operational in India. 90% of these phones are capable of handling financial transactions. In 2019, mobile payments in India rose by 163% to the converted amount of 235 billion euros. Internet and mobile services are growing fast in India. As a consequence, digital payments emerge on a never-before-seen scale. My name is Robert Luck. I am the Austrian Trade Commissioner in New Delhi, and a very warm welcome to our webinar, India and the Future of Money. India's biggest challenge for e-wallets and e-money is the sheer size of the country's population. For the consumer, mobile payments need to be quick, easy to use, and secure. For the merchant, it needs to save time, cut costs, and preferably give them a new stream of revenues. About these issues and more, we will hear today from a selected group of experts. I have also prepared a chart for you, what we are doing in India. It is, I think I would like to mention, apart from our office here in New Delhi, we have also branch offices in Mumbai and Bangalore, and there are about 700 Austrian companies doing regular business in India. We have 150 subsidiaries. And India is the 26th largest export destination for Austrian products. With this, I would like to hand over now to my colleague Ajay. Ajay, please.
Thank you, Dr. Luke. Good morning for the audience in Austria and good afternoon to the ones joining from India. Thank you very much for joining this webinar on India and the future of money. So first, I will give you an overview of Indian fintech and what future of money looks like in India. My name is Ajay Singh, and I'm the Technology and Innovation Officer here in Advantage Austria, New Delhi. Here we go. So India is an emerging economy with 360-degree finance, one of the fastest growing financial technology market in the entire world, which we call fintech. We can say Indian population and domestic consumer makes India's ready market for companies to look deep inside. According to unique identification for Aadhaar in India, updated in May 2020, Indian population by 2021 is estimated to be 1.39 billion. In India, March 2020 was the highest fintech adoption rate out of the emerging market worldwide. That was 87%. In other emerging economy market, it's around 63%. India is very much far ahead in its domain. Pandemic, of course, slowed down growth worldwide, but surprisingly in Q1 in 2019, a year before the pandemic, India has overtaken China as Asia's top destination for fintech funding. It also shows in numbers, you see $286 million versus China's $192.1 million. A large majority came from the innovative fintech startups and funding raised by them. Also the support of the Indian government by a push for the digital revolution. In 2019 alone, Indian fintech sector is valued at $26 billion and expected to reach 84 billion by 2025. The driver for this huge jump of numbers in India is the government push for digital economy and improved digital infrastructure. And one major contribution comes from the increased adoption rate of the internet. Again, the huge chunks of the population is now connected with the internet. And people from tier 1 cities and from the tier 2 and tier 3 are also connected very well connected with the internet, with the banking infrastructure, transfer of payments to B2B and B2C. Now it's preferred by digital mode only. UPI and net banking are some of the major advantage payment method. We are widely used in India by millions of on daily basis. So, and other than that, startup culture and adoption of new technologies like artificial intelligence, blockchain, big data are offering many personalized services as per need and demand of the B2C and B2B customers all across sectors and verticals. So Indian economy is fully committed to innovation. For example, neobanks and digital-only banks are revolutionizing the Indian fintech market at a large scale. Yeah. So that's all from my side on how the future of money looks like in India. But that's not all. Today we have very lucky to be joined by the expert from Indian fintech industry. Now I will call upon the names of the speaker and request them to switch on the camera and say hi to our lovely audience one by one. Today we have Mr. Raghav Dhanuka from Invest India.
Good morning. Good morning to all of you.
And Ms. Mohua Banerjee, Mr. Nityanand Sharma, and Mr. Rana from Paytm.
Hi. Hello, everyone.
Thanks and welcome all the speakers. And now I would like to invite Mr. Raghav Dhanuka from Invest India to enlighten us with his keynote on Payment in India, Journey to the Future. Over to you, Mr. Raghav.
Thanks a lot, Ajay. Good afternoon to everyone from India, and good morning to all our folks and viewers and attendees from Austria. Thanks for taking out the time. Given the broader context of payments and money in India, I wanted to set the context for today's discussion by talking about the three economic primitives that are driving the digital economy of India, that are driving the retail payment systems in India, which has been lauded throughout the globe. This is the journey of the India stack, and I'll take you through the evolution. Back in 2007-8, during the onset of the great financial crisis, India's banking system was struggling with high KYC costs. The average cost of onboarding a customer was more than $20. And there were almost 400 million Indians without any formal identifiers and formal documentation of identification proofs. In 2009, the foundation stone for the first layer of the India stack was being laid upon with the formation of the Unique Identification Authority of India, the UIDAI. Aadhaar, meaning foundation, was to be the first of the three layers of the India stack. Its purpose was to provide a digital identity to all Indians, and the basis of the identity was biometrics. The first Aadhaar cards began to be rolled out back in September 2010, and thus began one of the largest biometric drives throughout the globe. The Aadhaar was a 12-digit unique code with other basic details, which could be utilized online and which could also have a physical presence. So it was more of an identity that you could carry anywhere with you in your journey throughout India and also the globe, representing when you are representing your Indian identity. In 2012, the Aadhaar-based eKYC, it's an electronic Know Your Customer solution, was launched, which used the biometric scan and the 12-digit Aadhaar number for providing an easier KYC verification. It enabled banks to expand their customer presence drastically, because hitherto they were not reaching out to the semi-urban areas, the rural areas, because of profitability concerns. So this was being addressed by the eKYC solution that was based on Aadhaar. It was a two-factor authentication which utilized the Aadhaar and your mobile-linked one-time passwords. By 2014, in just a matter of 5 years, we see that more than 1 billion Indians had been issued the Aadhaar identification card. It was truly the largest biometric identification drive ever. In 2014, there was another very important initiative launched by the government of India, the Jan Dhan Yojana, or loosely translated into English as the People's Wealth Scheme. It was a financial inclusion drive to provide banking and financial services access to a lot of unbanked Indians who did not have even a bank account before this. And as a part of this drive, by 2020, we have almost onboarded 400 bank accounts, and many of them being new to bank and new to credit customers through the means of the Jan Dhan, the financial inclusion drive. And there have been other products which have been launched as a part of this drive. There have been insurance products that have been built up along with this drive. And there have been many other initiatives that have come along with this drive, as we shall now explore. In 2015, another Aadhaar-based product, the e-Sign, was launched, which is a legally valid digital signature. It allows you to digitally sign a document using your Aadhaar number. And again, the two-factor authentication verification mechanism. In 2016, what was one of the most significant revolutions in the telecom history of India. A mobile operator called Reliance launched the Jio Platform. And within just 6 months of its being launched, it had almost more than 10 million customers onboarded onto its platform. And this was brought about, the ease of onboarding was a result of the previous drives around the eKYC and other products. In 2017, the CKYC, or the Central KYC Registry, was formed. It is a KYC registry which ensures that multiple banking institutions do not have to undertake a KYC each and every time a customer faces those institutions. So it ensures to remove the duplication of the KYC efforts. So if you have to open a bank account, you just do your KYC once. In the future, if you're looking to open up a mutual fund, if you're looking to invest in the capital markets, or looking to buy a life insurance policy or a health insurance cover, all of that does not require you to undergo the KYC verification each and every time, unless there is a change in any of your basic details. So this is still a work in process whereby more legal entities are being covered. And this was launched in 2017 with the support of a lot of regulated entities across the capital markets and the banking institutions and insurance regulators and many more entities. In 2018, by 2018, we had almost 80% of the adults who had an access to the bank, to a bank account, largely a part of the financial inclusion drives, the earlier Aadhaar identification drives, and the cost of onboarding a customer had also come down drastically. This had ensured that the banks could also reach out to other corners of the geography, which they were limited to because of P&L concerns till now. By 2020, we have almost more than 94% of the population having access to an Aadhaar card, almost more than 1.27 billion Indians. Using the two-factor authentication, the e-authentication through the Aadhaar channel, there have been over 47 billion transactions till date. And in 2020, another significant product around the KYC verification norms was launched, which was the video KYC. So before this, even for the KYC, in certain circumstances, a customer had to physically visit a branch for opening his account and thereby give his thumbprint or the iris scan along with the two-factor authentications. There were possibilities of having a digital KYC, but that was called as a half KYC, meaning that there were certain limitations on accounts which were opened remotely and digitally. But even that has been addressed now by the latest video KYC based norms that have been brought about by the central bank last year. And many banking institutions have started coming on board by launching their video KYC solutions. So now you can sit at your home and open a bank account remotely by doing the entire KYC over a video. So this was again one of an important reforms and initiatives in the field of identity and the KYC reforms. All of this form the part of the foundation layer, or the first layer of the India stack, also known as the identity layer. Moving on to the second layer, back in 2007, even before the UIDAI had come into place, the RBI, the Central Bank of India, had launched a Payments and Settlements Act in 2007 for providing the guidelines and regulations on monitoring the retail payment system in India and across various channels, including the systems enabling credit cards or debit cards, online payments, money transfer, remittances, and even physical instruments, checks, and demand drafts. So a large part of it was regulated in a more organized manner by the Payments and Settlements Act, which serves as the Bible now for the payments and settlement systems in India, and which forms the legal basis of all the payments and transactions. In 2009, a not-for-profit corporation, an umbrella entity, the National Payments Corporation of India, was formed with the backing of the central bank and the ownership of a consortium of banking institutions. The mandate of this umbrella organization was the operation of retail payments and settlement systems in India. The NPCI, as we shall see, has made a significant impact on the retail payment system in India. In 2011, the Aadhaar-enabled payment service, the Aadhaar-enabled payment system, the AEPS, was launched by the NPCI. So it allowed people to carry out financial transactions, withdraw money using small micro ATMs of sorts, just by using the Aadhaar card. They did not require they did not require a PIN code like a debit card would for transacting to take out a money. And before this, they had to go to an ATM to withdraw cash, and ATMs come with a huge cost. So it limited the expansion of the ATMs. ATMs were not a profit-making business. So therefore, we started having Aadhaar-linked payment systems, wherein you could just use your Aadhaar number and verify it with the help of the fingerprint for withdrawing cash. No OTP or PIN was required. So here we realize how important the identity layer has also been in catalyzing the it's been really instrumental in catalyzing the payments layer also. In 2012, the NPCI launched the Rupay debit card. So the Rupay debit card was developed indigenously, and it was launched within a very short span of time. Rupay has forged alliances across the globe. So think of it as an alternative to a Visa or a MasterCard in India. And you should, in the upcoming slides, you should see the scale of what Rupay debit card has done in just a matter of 5-6 years. And the kind of presence it has right now, it's amazing. And they've subsequently also started launching the credit cards based on Rupay. In 2012, the National Automated Clearing House, or the NASH channel, was also launched by the NPCI. So it is a centralized system for bulk and repetitive recurring transactions. Think of salaries and dividends happening electronically. So that is what it is all about. And it is a better and faster alternative to the historical means of bulk payments, which happened over the ECS channel. And at present, the NASH system has been successful in making bulk transactions with almost 17 trillion rupees worth of transactions in the last fiscal year. The Aadhaar payment bids system, the APBS, is again a payments-based system which is linked with the Aadhaar. It is again another good example of the interplay between the identity layer and the payments layer. It is used for transferring of government benefits and incentives to the bottom of the pyramid and to the unbanked, and for channelizing the subsidies. So it facilitates operations from the Aadhaar seeded bank accounts. using the biometric authentication, similar to what the AEPS does in the means of the workings of the channel. It uses a central key for electronically channelizing the government subsidies and benefits in the Aadhaar-enabled bank accounts. In 2014, as a part of the financial inclusion drive, the government had also, under the NPCI, had come up with the *99 hash, or the USSD-based mobile solution, which is a mobile-based payments and financial services feature. It lets you do a financial transaction on your mobile phone, which could be a feature phone, which does not require any access to the internet and which does not need to be a smartphone. So this has also helped in expanding the financial services to the bottom of the pyramid, who do not have the capacity or the wherewithal to purchase a smartphone or to have any access to the internet. So there are still many people who do not have an access to the internet. In 2016, one of the biggest reforms, one of the biggest innovations rather in the modern retail payments systems has come up in India, which forms an integral part of this second layer of payments. The Unified Payments Interface, or UPI as it is commonly called, is a payments interface launched by the NPCI. It is a low-cost payments interface that works in real time, and it is settled in fiat money. It allows for retail payments and account-to-account transfers, and even linking of multiple bank accounts from a single application. In India, the UPI payments are truly interoperable, providing UPI solutions to connect with just one sponsor bank instead of multiple sponsor banks. So take, for example, Google Pay in India. To access the UPI channel, the ecosystem, would require to partner with just one sponsor bank who's already been onboarded onto the UPI system. Whereas Google Pay in Singapore can only interact with 3 sponsor banks in Singapore. So they are limited to just doing an account transfers among these 3 banks. Within India, once Google Pay has an access to a single sponsor bank, you can send your money from one Google Pay account, which could be linked to any bank, to another bank account which could belong to a merchant and which could belong to an individual as well. So that is the kind of interoperability that the UPI has brought about. And considering the fact that I started, since the time I would have started my presentation almost 10 minutes back, there would have been almost 500,000 UPI transactions that would have transpired till now. Almost 5 lakh UPI transactions. So that is the kind of volume that the UPI-based channel has seen. Almost 1,000 transactions happening every second as we speak. In 2017, the NPCI also brought about a common QR-based standard and solution that enables digital payments and can be used across UPI-enabled banks, UPI-enabled applications. It was jointly developed by the NPCI along with the global payments operators such as MasterCard, Visa, and Amex. It is the world's first interoperable payment acceptance solution, which makes use of QR codes. It is the first global interoperable solution which makes use of QR codes, and all UPI apps running applications are mandated to be able to scan these codes, leading to a highly interoperable ecosystem and universalization of the digital payments. Further, the difficulty and costs involved in setting up of POS terminals. So remember, POS terminals are very expensive. So there have been challenges in having that sort of a P&L to quickly expand the POS terminal system. So remembering the difficulty and challenges that the POS system brings about, so they have been able to overcome that with the means of cheaper alternatives such as the QR codes. By 2019, there were almost 600 million Rupay cards. A large part of it was debit cards, and almost 30 million of Jan Dhan account holders had been issued the Rupay cards. So as you see, not just did we have a huge financial inclusion drive, but even debit cards and other new age instruments have been issued to them subsequently. And in just 4 years of its launch, the UPI, as the second layer of payments, has grown to become the world's 5th largest payments network by volume, behind only Visa, Alipay, WeChat Pay, and MasterCard. And it is gaining very fast. The third layer is that of data empowerment and protection architecture, or DEPA. DEPA is the overarching framework that governs consent-based and secured sharing of personal data. Sehmati is the non-profit entity, similar to what the NPCI would have been for the UPI, which was launched in 2019 to implement this consent sharing mechanism. This model was also governed by the account aggregation framework, which was launched by the RBI in 2016. Account aggregators have been labeled as a special type of NBFC by the RBI. The data itself travels from a financial information provider to a financial information user through an account aggregator. So there are 3 sets of entities in this model: the account aggregators, the financial information providers, and the financial information users. Account aggregators are the consent managers who play the role of enabling consent management for the user. These consent managers are data blind and will not see the user data themselves. Rather, they will serve as a conduit for encrypted data flows between the other 2 entities. They provide the interfaces through which users provide the consent required to authorize the sharing of private financial data. There are currently about 4 account aggregators who've been granted the license, and 2 or 3 more who've been given an in-principle approval. So it is still a work in progress, but it is going to be as disruptive, if not more, as the payments and the identity layer have been till now. The second entity in this model framework is a financial information provider, which is pretty self-explanatory. So it is any institution having your financial data. It is usually a regulated financial institution, such as banks. A financial information user is any institution who has requested for your data. It could also be banks who would play a dual role of being a FIP and also being an FIU, and also non-banking financial institutions and various other regulated financial institutions. So the account aggregators themselves are not allowed to store the data and not allowed to process and sell the customer's data. However, they can charge the financial information user or the end consumer for processing of the data. The framework allows for transaction-based lending and customized analytics on your accounts and access to your financial data, such as your credit history or your account statement, based on consent to various financial institutions who can then help provide a range of services on top of this data. A lot of work on this front is still ongoing, and it is also closely linked with the Personal Data Protection Bill, which is still in the Parliament, and it's still being jointly studied by various parliamentary committees with various feedbacks from the industry. And this bill will also be governing the usage of your private data. It was introduced in 2019, and there's still a lot of work going on this front. In 2020, a project called OCEN, or the Open Credit Enablement Network, was announced, which aims to leverage this account aggregator framework to embed lending into online marketplaces, GST platforms, and tech platforms. OCEN is an open source protocol for credit, and it is a digital public good. It digitizes the end-to-end process of loan origination, underwriting, disbursement, and also repayment and collections. One of the applications for the implementation of this Oaken model is the Sahay app. Think of it as an application of the Oaken model, which was announced last year, but it hasn't been released. It's still under development. As you may be aware, there is a staggering gap in the current access to formal credit, especially for small and medium businesses. By various numbers, various estimates of more than $350 billion of credit gap still remaining in the MSME sector in India have been spoken about. So one of the reasons for the lack of credit is the access to formal, adequate data for the borrower, formal borrowing history. And given the fact that traditionally banks have resorted to lending based on collateral in a very secured manner. However, of late, with the evolution of AI and other analytics coming in, there has been a strong push towards utilization of transaction-based data for these businesses as a supplement to the existing data towards the exploration of alternate forms of lending and underwriting. The Sahay application will be guided by the Oaken principles and provide these businesses on the indirect tax network, the GST network in India, as it is called, with a way to easily apply for credit using their tax invoices and transaction history as the data inputs, as the data surrogates, for availing financing of various sorts from the connected lenders. This model would also rely on the account aggregation framework, as we shall see through the help of an example. To give you an example of how this would work, consider any technology-based marketplace such as Uber or a food delivery application such as Zomato or Swiggy. So these technology marketplaces would act as loan service providers, LSPs. An LSP is like an entity, a marketplace with a merchant or a consumer-facing interface. Zomato's restaurants or Uber's partner drivers can avail financing from multiple lenders through the APIs that Oaken has to offer. These are all open APIs, please remember. These LSPs, these loan service providers, act as agents of the borrowers, who in this case would be restaurants or drivers. They help in providing affordable credit to these borrowers by partnering with multiple lenders and financial institutions. The credit products could be working capital or invoice-based financing or purchase PO financing or even bill discounting, so even personal loans for that matter. LSPs can also share the platform-specific data with the lenders, such as the number of orders received on the application in case of a food delivery app, or the number of drives undertaken by a partner driver, or the review or the rating of a partner driver, and more. So depends on the platform that they are on. So this Oaken model complements the previously discussed account aggregator framework by surfacing the borrower for the lender. It provides a very low cost of acquisition for the lender, and it converts a lender-driven market. It converts a borrower-driven market into a lender-driven market. So these lenders request the borrower-specific data, the previous borrower history, the GST returns, the credit ratings, etc., from an independent account aggregator who would be linked into the Sahay application or any other application which is built on top of this the Oaken principles. The account aggregator provides, so it acts in a consent management role and consent management capacity, facilitating the flow of data between the users who would require the data and from the users who would have the data. To summarize, this framework would utilize all the three layers discussed before. So the identity layers, the payments layers, and the data empowerment layers. The origination of the loan would be dealt with by the loan service provider. Think of it as Uber originating a loan for its partner driver from right within the application. The KYC will be undertaken by various mechanisms. It could be a video-based KYC, it could be an e-KYC channel, or it could be a tax network. So these would form a part of the identity layer. For the purpose of underwriting, the business inputs would be provided by the loan service providers to the lenders or the financial information users, and other inputs shall be provided by the account aggregators, such as the account statement from a particular institution. So this was a part of the third layer, right? And the documentation can be done through the e-signature, which again is part of the identity layer. And the disbursals and the repayments can happen through the mechanisms of mobile payments, UPI or IMPS, which would comprise the second layer. So all in all, as we see, so right now, although it's still a work in progress, the third layer would also incorporate the first two layers. And we see the crucial importance of all the three layers coming together. So this was the third and the final layer of the India stack. There are many more layers being added across. So in conclusion, this is largely the history of the India stack. But however, alongside this, there have been other supporting regulations as well. So in 2015, the RBI had granted in principle approval to 10 small finance banks. So the purpose of these were to further the financial inclusion by providing credit to small business units and small farmers and unorganized entities. Since then, there has been a stellar progress in their operations, and they've largely achieved their priority sector targets. In 2017, the central bank had taken cognizance of emerging lending channels and created regulatory framework around P2P lending, thus providing alternative credit access to the unbanked. In 2019, in fact, over the past 2 years, further innovation has been encouraged by regulators, not just from the RBI, but also across the capital markets and insurance, by opening up of the APIs for testing transformative solutions in the form of sandboxes. RBI's sandboxes in the first cohort launched in 2019 focused on payments, and in the recently launched second cohort have focused on innovations around cross-border remittances. For the capital markets and insurance regulators, similarly, they have also launched their sandboxes to allow startups to innovate by providing a conducive ecosystem and the adequate technological infrastructure. In 2020, sensing the success of the NPCI, the body behind the UPI payments, which was a not-for-profit body, RBI has further invited applications for setting up of a similar umbrella entity. It's also called the new umbrella entity so far, which can be run by diversified consortium of private entities for further empowerment and boosting of the retail payment systems. But unlike the NPCI, the new umbrella entity is allowed to operate for profit. So I'll just quickly, I realize that I'm running short on time. So I'll just quickly take you through the other slides. So as you can see, India's transformation into a progressive fintech leader, it's the culmination of years of effort in policy implementation and governance. As we just saw, this has happened at the back of a series of structured approaches. Apart from the previously discussed identity and payments layers, there have been instrumental efforts on the front of mobile, internet, and data. More than 1 billion mobile subscribers are there in India right now, as we speak, across various spectrums of 2G, 3G, and 4G. And over 500 million Indians already have smartphone. And this has been projected to go up to almost 800 million by the year 2022. India also has the second largest internet market of over 705 million internet users, aided by one of the cheapest, in fact, the cheapest data rates across the globe at just a quarter to $1, compared to a global average of more than $5 for a similar amount of data. So these have truly enabled building up of scalable platforms like the UPI, And all have been, in fact, all have come together to be pretty instrumental in the success of payments as far as fintech and payments are concerned. Over the last 3 years, so there have been a significant interest in the fintech startup ecosystem in India. And it is right now the second largest market in terms of the startups founded in the last 5 years, as we can see. So a significant amount of, so there are right now over 2,100 startups in India, more than 2,100 fintech startups. And India's fintech market size is estimated to again further grow to become almost $80-85 billion in the next 3 or 4 years. And also the VC funding and the investment within fintech has doubled to almost $3.7 billion in 2019 from about $1.9 billion. And this has happened over 200 plus deals. And we have 7 fintech unicorns. We recently, in fact, witnessed the latest unicorn addition. Unicorns startups having more than $1 billion of valuation. So we recently witnessed a unicorn in 2021 in the month of January. So out of 35 or 36 odd unicorns in India, there are 7 to 8 of them within fintech. So 20% of the Indian startup system. So that is the kind of interest that fintech has seen within the broader startup ecosystem. So just to give you a brief sense of what the payments, the balance sheet for payments or the breakup of payments for the RBI looks like. So this has been pulled out from the central bank's payment system indicators. And it gives you a brief overview of the volume and the value of payments within India. It excludes the clearing corporation and the wholesale interbanking payments, and it is more focused towards the retail payments. So we see that the mobile payments which have happened over the IMPS, the UPI channel, and also to some portion the debit cards channel has seen a significant jump in both the volumes as well as the value. But the biggest impact has been that created by the UPI of over 341% annual growth in the value over the past 2 years. So the RBI, the central bank, is working in close collaboration with the government and the National Payments Corporation in the direction of further expanding the reach of UPI and Rupay globally, apart from Bhutan and Singapore, and prospectively in South Korea and in the UAE. Some of the new initiatives recently launched on the payments front by the central bank include the 24/7 NEFT funds transfer, which happen in batches. That can now also take place 24/7. The digital payments index, the digital payments index will come out in a couple of months' time based on a various number of parameters, and which shall be regularly uploaded by the central bank. And you can see that on the central bank's website starting April. And there has been a lowering of transaction costs further under the real-time gross settlement mechanism. So this is just to give you a brief global comparison of payments as it stands across the various countries. So India is processing almost 5 times the number of transactions than the second largest market listed here out of the 6 markets. However, there still remains plenty of room for further growth, given that the per capita payments are still one of the lowest out of the 6 nations over here. So this is again just to give you a brief overview on the recent increase and surge that we've seen in the card-based payments and the mobile-based payments put together. So against the ATM withdrawals, the cash that you withdraw from an ATM, so that has so the card payments and the mobile-based payments have taken over the ATM-based withdrawals in the year 2019, and it's further expected to go further north from here. The debate still remains. So there's a lot of questions coming out whether whether it's a card versus mobile debate. I'd rather say that for the time being, it's a card plus mobile versus the cash debate. However, the mobile payments have exceeded in value terms compared to the card payments. But again, a large part of this is also account-based transfers along with the merchant payments. What is the opportunity right now? So the total retail sales in India is estimated to be around $800 billion, out of which more than 96% still happens in store, and the remaining is e-commerce. But for the in-store payments of $780 billion, which is about 90% of this, the card and the mobile-based payments still account only for 1/5 of them. So there remains a plenty of headroom for further growth. And as you can see, though we are still stuck at only 0.2 million, that is the number of ATMs that we have in India, the surge that we've seen in the UPI QR-based infrastructure is really amazing. And we also see that there are more than 874 million debit cards as on October 20. So a large part of this was a result of the Rupay debit cards that I had spoken about earlier. And we've also seen a phenomenal increase in the number of prepaid instruments. So this is the overall payment system infrastructure as it stands in October 2020. This is a broad overview of the fintech ecosystem, and I realize that I'm running short on time, so I think I'll hand it over to Mr. Ajay. Just to finally conclude, what is next for the fintech ecosystem? We have frictionless payments. A lot of work has been going around on this front to have a common mobility card, and we already have the contactless payments in place, but there are further innovations being developed on top of this. And of course, there is voice and face recognition based payments, and cryptos still remains a very largely debated topic. And whereas we see a lot of innovations and discussions happening around the CBDCs, which are the central bank digital currencies. So we expect a lot of work being done on this front over the next couple of years, especially on the CBDCs. So I'll wrap it up with this, because I don't think I'll have further time to expand upon CBDCs. Thanks a lot. Over to you, Ajay.
Sure. Thank you, Mr. Raghav. And this is a wonderful presentation. I'm sure people listening to you all over Austria and other parts of the world would be benefited with your expertise and knowledge. Thank you, sir. I request audience to feel free to ask questions to Mr. Raghav, and I will make sure to pass on to him right away. Okay, we have one question on more clarification on Aadhaar enabled payment system versus UPI. So we have some, we are using UPI in India for a longer time, but AEPS is new. So would you like to add some views on AEPS?
So AEPS has a different use case compared to a UPI. So a UPI is more to do with mobile payments. Whereas an APS transaction happens on a device, you can think of the device as being a micro ATM of sorts, and you can just plug in your the Aadhaar number and your biometrics, and you can withdraw cash. This happens in partnership with business correspondents and various other channels who enable these transactions. And it is especially true for tier 3 cities and semi-urban areas where there is still a lack in access to the internet or mobile payments. The UPI, however, is a mobile-based payment. It happens from within your phone. You can scan a QR code at a merchant, and you can directly transfer that amount to him in just a matter of a couple of clicks of your phone. And you can also transfer money to someone, to a peer. It enables a peer-to-peer transfer through the means of the mobile channel. And the transfer is not of a digital wallet-based currency. The transfer is that of the fiat currency. It is INR or rupees that gets transferred from your bank account to the person or the merchant's bank account.
Okay, and one more question on the same lines is how Austrian companies or startup or banks can make use of APS and UPI if they want to enter in India?
So Certainly. So for the AEPS, the infrastructure is where if you are providing any sort of infrastructure. So by infrastructure I mean the micro ATM devices. So a large part of work is still pending on expanding of that infrastructure. So any sort of innovations around that front would be definitely very beneficial. And I'll just run you through the infrastructure that I'm speaking of. So this is the infrastructure that we have right now. And we have bank-owned ATMs, we have white-labeled ATMs, and we also have micro ATMs, 0.3 million of them right now. So any sort of innovation on this front, if you are an Austrian company, would be welcome. On the UPI front, if you are developing a fintech application which serves as a platform, then you can definitely partner with a sponsor bank for getting onto the UPI network. So that is the provision that we also have.
Okay, that's perfect, Mr. Raghav. And thank you for your sharp presentation. We are lucky to have you today with us.
Thanks a lot, Ajay. Thanks a lot to Advantage Austria and to all of you who took out your time to attend. Always a pleasure.
Thank you very much. And now we have the exciting time to start our panel discussion. I'm honored to be joined by experts such as Ms. Mohua, Mr. Nitya, and Mr. Rana. Please turn on your cameras and we will start our panel discussion. A warm welcome to all. And yeah, we start. So this is the question of the day. What is the future of money or monetary transaction looks like in India? I would like to ask Ms. Mohua, what do you think on future of money or monetary transaction in India looks like?
As Mr. Raghav just pointed out, and with the various statistics, etc., in terms of our landscape currently, with a population of the scale that we are, and even to that, I would say we're not even reached the full capacity. So with various innovations, whether it is powered by blockchain, AI, artificial intelligence, there's a lot of things that we can do with the KYC and AML, leveraging a lot of common assets across banks, where fintechs are playing a major role. We still have a lot of way to look at how we can further bring in technology innovations and improve our situation with the money position right now. Because if you look at the way we are dealing it, even now 18% of the transactions that we see in our country is cash. So there's still a lot of headroom for us to deal with cashless payments. So I would say that there's still a long way to go.
Yes, that's very interesting. And I would like to ask the same question to Mr. Rana. What do you think about the future of money or monetary transaction looks like in India?
Thank you. See, in India, although there were a lot of innovations and developments that have happened over the last decade or so, and they were rightly pointed out by Mr. Raghav in his presentation, but we still see that there is a lot of unbanked population in India, especially in the rural areas, tier 2 and below. If we still go in India, there is a dearth of, if not about the availability of solution, but it's about the accessibility and affordability of such solutions in the country. So if I have to talk about especially, say, suppose a UPI-based payment system, still there is a huge dearth of usage of such systems in the lower rung of our society and tier 2 and below cities because of the lack of proper infrastructure that is available to this population. And by infrastructure, I don't mean the internet connectivity and all. Thanks to players like Jio, who had completely disrupted the market a couple of years back, and now we are the cheapest telecom provider or internet provider in the world. But it is in terms of the affordability for the smartphones and the supporting infrastructure that is required around making such payments. So in order to further deepen such payments or in order to make our society completely cashless and take it to the lowest rung of our society, there's still a lot of work that needs to be done, and the government is in the right direction. The startups that are there, that are coming up, be it the neobanks, be it the lending system that we are building, or in terms of the insurance infrastructure that India is currently working on, it all is it's taking us to a really good direction, and we hope that in the near future it will be advantage for all of us.
That's very interesting views from you, Mr. Rana. And as a fintech startup in India, what do you think, Mr. Nitya, on the future of money or monetary transaction in India?
Yeah, absolutely, Ajay. And first of all, thanks for putting this panel together and a great presentation. Our view is this. India is a very interesting place right now where, on one hand, we have the most sophisticated technology and infrastructure, both on the mobile internet side and on the banking side, right? So if you look at the market, we have 500 million people connected with a smartphone, connected to the internet already. A lot of them are buying things online. We have this phenomenal banking infrastructure that is probably the best infrastructure in the world, where, first of all, every single adult in India has a bank account. Does not matter whether you're poor, rich, village, big cities. Almost 850 million people in India has a bank account. I don't think there is a country in the world which is so banked. It's almost 100% penetration. Every single person who has a bank account has access to both debit cards, Visa, MasterCard, or Rupay cards, and UPI, and of course, any of the wallets. Yet, what we see today is 70% of all e-commerce is still done with cash on delivery, and in regular stores across the street, 80 to 85% transactions are still done with cash, right? So what I believe, and we at Simpl believe, the problem is user experience, and that's true for any technology innovation, right? The innovation has happened, and of course it's happening, and there is no shortage of data, AI, ML, all the infrastructure is there, but people are still not adopting digital payments to that extent. And I think what a lot of startups are working on, we are working on, Paytm is working on, and so many smart people are working on, is how do you now use this infrastructure to build user experiences that people love, right? And payments, especially when you're doing transactions, this user is one important part of the user experience is trust. Because when you're buying and using money, trust becomes a very important part of this thing. And I think the opportunity is to build user experiences using the platform that we have, such that people start using the user experience and getting more digital payments.
That's really great, Mr. Nitya. And I mean, this is very much important. And what do you think about partnership and alliances in the fintech area? I think, Mr. Rana, you go first on that. How much is it important to have partnership and alliances with banks and B2B, B2C, or startups, and we share the same ecosystem? What is your take on that, Mr. Rana?
Thank you. According to me, what's happening today is all of us in our different domains are doing a lot of innovation. So if we talk about sector-wise, there are different sectors that all of us are dealing with. It might be in terms of insurance and lending, in terms of building mobile payments, in terms of building up layers on the UPI payments, or in terms of exploring the NCMC or the National Common Mobility cards, which will be kind of a single card that will be used across the country. Now, the next step for all of us, and probably the bigger players or even the smaller players as well, is to kind of find synergies between different systems. So for instance, if I have to talk about, say, a company like Paytm. So since Paytm sits on a huge database as of now of the customers, can this database be then utilized to sell other products, or to kind of build other innovative products in the domain of, say, insurance, in terms of lending, or in terms of other financial products, which would be helpful not just for the 500 or 700 million people that we are talking about who have smartphones or who have access to all the new age payment systems, but also to the remaining say 700 million people that are there in India. So payments probably that can be built upon the feature phones, for instance, or payments that can be built on, say, an assisted network like a BCA, or like we spoke about the Aadhaar-enabled payment system, which is assisted by a BCA network. So this is the second level of innovation that needs to be brought in, and of course, all of us should be welcoming such ideas, and bigger startups or bigger companies should be partnering with smaller players, or players who are working in the niche segment of providing such solutions in the market.
That's great. What is your view on same, Ms. Mohua, where we see partnership and alliances in fintech area?
Right. So I'll respond it more from a banking perspective, right? So now the current pandemic, if you look at the the situation where various countries, in fact, in India itself, we saw a very long lockdown in terms of the entire society went through a phase where people saw that right from any trade or financing, all of that came to a standstill. So what we see that the business model that the banks have taken, right, they've really moved from what was seen as the traditional model, where banks were focused and looking at how do they improve their internal systems to be able to handle the kind of customers which they felt that they owned the customers at that point of time, to a digital banking model where it was more customer centric, like how do I give a better customer experience. And sooner they realized the fact that they will actually have to work with a lot of these ecosystem players, like for instance Paytm, and the UPI enabled systems, because earlier the banks would, prior to their NPCI etc. being formed, banks would actually form groups and they would have these understanding between them that they would move the transactions between them. So then sooner or later they realized that they had to open up to an ecosystem driven business model, and which required for them to work closely with their competition. So here comes a model where they basically will have to share, trust each other, and also ensure that while they're sharing that information, that is secure and it is gives the customer better experience in terms of how they are working together. So they had to evaluate in terms of how much of the portfolio they were to let go and retain, which potentially what they were doing earlier was that they were trying to safeguard it or have a monopoly on it.
That's very much interesting, Ms. Mohua. What do you think, Mr. Sharma, on partnership and alliances, both as a startup and as an observer of Indian fintech ecosystem? Where do you see partnership alliances in fintech area in India?
Yeah, so obviously, fintech and payment generally being such a massive market and just so many moving parts, it's almost impossible to do anything without partnerships, because there are so many people or enterprises that from banks to non-bank finance companies to aggregators and payment processors, and all of that plays a very important role in making a healthy, stable financial system. And therefore, fintech by default is a partnership platform, right? So if you think about the biggest fintech company in the world, right? It's Visa, and it's a platform which connects all the banks together to deliver consumer experiences. So we believe, and I believe that partnerships are not only important but essential to scale fintech payments across a very large market like India.
That's very interesting. And yeah, let's deep dive into the consumer behavior in digital payments. So from Mr. Raghav's slides, we have seen that now payment, this penetration not is in tier 1 or 2 or 3 cities, it's all over. So what is your take on that? Let's say, Mr. Nitya, on behavior in digital payments, who are the customers as of now and who would be the customers of the future?
Yeah, no, absolutely. So, when you think about let's say the last 10 years in India, we saw this phenomenal time of building infrastructure. It was led by primarily the government, I think, right? So it is all UPI, Aadhaar, what's called the India stack, bank accounts, etc. And, we kind of like, it was a lot of work was going on in the early part of the last decade, and it started bearing some fruit, and we saw the birth of Aadhaar, the India stack, the UPI, etc. in like mid around 2014, 15. And then of course we had the demonetization and stuff. And what we saw really was, while we had the technology and it was being built, the adoption was not as fast as we would all hope and like, right? Because there was clearly an adoption of digital payments during demonetization, and then whenever the market came back to normal, people went back to cash. And as I said, I believe it was a user experience problem. It was people will do what they feel is best for them. They want to feel safe, they want to have a good experience, and so on. And of course, startups, companies, banks, everyone is building user experiences that is slowly but surely increasing the adoption of digital payments. So while we have not solved the whole entire problem, it is definitely increasing. I believe what is interesting that has happened over the last 9 months because of COVID is, and this is true for a lot of internet trends, including payments, COVID has pulled forward the future by at least 5 years, if not 10 years. It is one of those times, not only in India, but around the world, that everybody has a common reality. And it's just one, which is we are all at home with a pandemic around us, and our lifestyle have completely changed and almost rebooted, and not only rebooted for a small period of time. It's already been 9 months to, I guess, 11 months now, and it's not going away anytime in the near future, right? So this was the great reset on what people will do in the future. And webinars like this, earlier we would sit in a room and talk about stuff. Today we are here, so many people can watch. And when you think about it, just so many business models and businesses and trends that were supposed to be realized over 10 years around e-commerce, digitization, digital communication, payments, etc., I believe have been pushed forward 5 to 10 years. And that's a very important macro factor. And what we see on our end is because people are buying things online more, naturally people are doing online payments more. Because of the pandemic and COVID, people feel less safe with cash, right? Because cash is naturally touched by so many people and therefore unhygienic, and therefore there is a real shift. When I say real, I mean it's a market-driven shift as opposed to a top-down type shift, which is leading to, I think, explosion in digital commerce and digital payment. So it's, I think, very interesting time. Of course, it's a pandemic, so therefore overall bad. But for some digital trends, it's one of the biggest accelerants that we could imagine in the next 10 years.
Yeah, I totally agree with you, Mr. Nitya. I mean, pandemic, obviously, it's bad for everything, everyone, and all over the places. But yeah, digital revolution, especially digital payments, they made sense, and many fintech startups picked up in this time. What do you think, Ms. Mohua, on the same lines on behavior in digital payments, especially in India?
So in terms of behavior of digital payments in India, if you look at it, right, expanding to what Nitya just said, is that fact that, all of the entire part of the ecosystem where, the fintechs, the banks and others are applying was also in a way supporting, the small and medium enterprises in the country. Now, I'm emphasizing on the small and medium enterprises because, this situation in terms of the need to go cashless, etc., actually led to a huge, emphasis in terms of how you're financing the SMEs in this market, right? Initially, they saw a lot of gap in terms of, cash inflow and cash outflow, in terms of, how they were functioning in the market. And this current COVID situation actually has led to that gap being higher. So there is now a lot of fintech players, etc., who are coming into the market and trying to, address the gap that is there in our market to, help these SMEs and MSMEs get that financing, which is their main source of, money flow for their business. So there's a lot of fintechs who are coming in there. There's innovation in that space. And even the banks are actually looking at various means in terms of how they could do better in terms of risk scoring, credit profiling, for this particular group of, an economy, which actually contribute about 40% to our overall exports, right? So that means a huge impact to our economy itself.
Yes. Ms. Mohua, I would be very much interested to know more from what do you think about the transformation of banking through blockchain, especially, when banks are also exploring blockchain payment methods. So what do you think the transparency it brought through by blockchain in banking system?
Right. So blockchain, as we know by itself, the means that it is something which is immutable. It's a solution which is more practical when you have a multi-entity system, and what we mean by that is an ecosystem. Now here, an ecosystem need not be built between people who know each other, right? The whole beauty of it is that you can bring in people and put them onto a network who are looking at inter-organization performance. And by virtue of sharing information on the network, they are basically able to, give a consent on it, look at it immediately. So they go by the concept of what you see is what I see, right? So the banking industry, especially in India, after the RBI has launched the sandbox, etc., and went about, the Vajra platform, which is still in progress, which is being built by NPCI, which is looking at settlement process for cross-border transactions with the NPCI products itself. So with a lot of emphasis being put in terms of how do you look at a system which can give you information at the same time, it's also trusted, right? And not all information is being replicated on the network, unlike what people think, in the public blockchain, but this is a permissioned and private network that people are holding on to. So there's also taking care of data privacy. So if people have to look at various levers in terms of, how do they make certain products available to certain customers after looking at various, KYC, AML, risk profiling, credit risk ratings, etc., where they actually are looking at same parameters at the same time there's an overlap on it. How do they look at that and provide a better service to the customers? They are leveraging to a large extent the blockchain network because of the inherent nature of blockchain, that it is transparent to participants who are active in that particular transaction. So that's how transparency is being made effective in blockchain.
That's perfect, Ms. Mohua. Mr. Rana, what do you think about the innovation ecosystem that shape the future of money? What are the innovations, since you worked with Paytm and you are still working, and Paytm kind of have a flag bearer for the digital payments in India as of now. What do you think, as Paytm, the flag bearer of digital payments in India, and what would be the next big thing we should be looking at?
See, first of all, So first of all, not just through companies like Paytm or Simpl or Infosys or all of us together, it's also been a lot of, it has also been supported by the by the government, is what I would like to first state. Because the government over the years has built an entire ecosystem, not just around payments, but they have helped in shaping all of us together. So be it by first banking the unbanked, or linking bank accounts with Aadhaar cards, or then probably bringing new payment instruments, or promoting UPI, so on and so forth. So first of all is that. Second thing, in terms of innovation, if we have to talk about, then innovation has to be seen in a broader perspective, wherein the innovation has to be something that works for all of us, not just for a limited section of the society, but for the entire ecosystem. So that is where newer systems. So for instance, FASTag is a new payment collection system that has come on the run, and it is kind of being considered as a demonetization for the vehicle industry. And FASTag is now being considered as an Aadhaar for your own vehicle, wherein it will again be a cashless payment that would be facilitated at the back end by a banking system or by a wallet. Similarly, if you consider about the LPG payments now, so what we are trying to do as Paytm is a large section of the LPG payments are still COD or customer or cash on delivery. What we are trying to build is that how can these payments or similar payments, be it on electricity or recharges or piped gas bill payment, water, electricity, or be it your challans, how can all of these payments, which either come under your regular utility payments or commodity payments, or payments that you are regularly making to different entities, how can all of them be channelized, all of them can be automated, and all of them can be brought on a single platform, and the customer has the convenience to view them, to make payments, and at the same time maintain all kinds of contactless or touchless points, so that you are even taken care of by Corona and other such places as well.
Yes, that's interesting. Mr. Sharma, what do you think on that? Innovation in terms of, and where do you see the future in terms of innovation, especially in fintech? What would be the next thing we should be looking at?
Yeah. So I think there are two things clearly happening in India and generally around the world, which is, so So in India, as we just discussed, there is a lot of infrastructure level innovation that is already happening. A lot of that was catalyzed by the government itself, and that is things like the India Stack, the UPI, etc. Right? So that has happened, and there is a lot to do, but it's moving in the right direction. There is also a lot of technology innovation that has happened around things like blockchain and AI, ML, and so many breakthroughs that we can now leverage to solve customer and market problems. So therefore, what I think the opportunities and like what will happen in the future, besides continue to develop the technology, is application level innovation. And when I say application, I don't mean mobile applications per se, but how do you now use whether it's blockchain or UPI or India Stack or AI ML to construct user experiences, right? That solves users' problems, markets problems, and business problems, right? So to me, there is a lot, and I think as I mentioned, COVID is a very interesting time to really bring new things to market, because everybody is doing new things. Like all our lives are new now, and therefore people are just more open to doing new things, trying new things, and just changing their own behavior. So to me, it is really about how do you now use the data to build more personalization. How do you use data to create more machine learning and artificial intelligence so that you can build products that are safer and more intuitive for consumers to use, and so on, right? So a lot of application level innovation is, I think we'll see in the future.
That's perfect, Mr. Sharma. Ms. Mohua, there is one question on transparency, especially brought by blockchain. Can we say now that, okay, the fraud prevention we have achieved by, let's say, 99% in banking environment, if we are moving towards blockchain payment system, or for transparency, what do you think about how much it's beneficial?
See, from a transparency perspective, because as I said, where we speaking about is more in terms of a private permission, blockchain network. It's still to be, cannot be something that we can say about the public blockchain network, because in a private permission, because using what blockchain brings in something called a smart contract, you are, defining certain rules or programs, as it is called, where certain things are automated and consent is achieved by that mechanism. So what you're doing is that you are, getting the parties to give a consent on the network. Now that is also being covered as part of the legal framework. If you look at the IT Act that has been covered in India itself, it actually defines it for various, instruments to say that in a closed network, when such a consent is achieved, it is also legally held. In terms of that, yes, you have given consent on that particular transaction. So what happens is, in that case, is that information then when it reaches on the ledger cannot be tampered. So you are, by virtue of that, ensuring that there is, to some level, security protocols are being followed, and cyber attacks, etc. You are ensuring to a lot extent that you're protected. So in many ways, fraud in terms of the same information being brought back onto the network, like, we've seen in the recent past of invoice and purchase order frauds happening specifically in trade, where, global banks like ABN AMRO, etc. got impacted with the incidents in Singapore. A lot of that is actually being ensured. In India, there are systems that are being put in where you can actually validate and ensure that on the blockchain network, if such a transaction happens again, it throws it as duplicate or fraud. So there are various mechanisms of blockchain itself that is being used to ensure that people can detect that, yes, this particular person is trying to do fraud on the network. Similarly, using KYC and AML capabilities, which you can create an overlap on it, you can identify those fishy transactions, counter, some of the money laundering cases are also being avoided by effective usage of the technology. So the technology can be applied at various levels to ensure what kind of fraud you want to prevent.
Okay, that's very much interesting. And now I'll ask all the speaker one by one your comment on how digital payments are shaping the consumer journey away from the card economy. Now we are losing grip on physical wallet, rather we have a mobile phone wallet, and our mobile phone has already kind of become a wallet. So your views on card economy versus wallet economy? We'll start with Mr. Rana. What do you think on that? Do we still need to carry our credit or debit cards, or Paytm is enough?
See, as such, at the back end, even if you think in terms of a wallet or a UPI, most of these systems at the back end are still powered by either a bank account or a card. So cards in the near future are not going away anyway. Secondly, see, mobile payments, if you talk about, the biggest thing is the kind of experience that they are building for the customers. It's a pretty seamless experience, also contactless, but it's also in terms of, so for instance, if you are making payments through a mobile wallet, it's just a one-click payment, right? You don't even need to make authentication, because the kind of money that you keep in your wallet is a limited amount. So hence your exposure is also very limited, and you can do a direct transaction. In terms of scanning a QR code, making a payment even through a UPI, it's still seamless compared to a card transaction, because at the end of the day, the number of hops that are also involved at the back end are lesser, and hence the success rate, if I have to talk about, is more. And that is where the customer concerns which are there around whether my transaction will fail, my money will get deducted, and how will it get refunded, so on and so forth. So all these apprehensions and all these doubts that the customer has are being taken care by mobile wallets and UPI payment systems. And that is where I feel they are ahead of, or they have an edge over a card system. Of course, in the card system as well, now, as you would have seen, that cards and the wallet or UPI payment system are also becoming interchangeable, because even for a wallet, you can have a prepaid card issued against it, or even for a card, you can save that card into your mobile wallet, or even in terms of making payment through an Apple Pay or a Samsung Pay. So the lines are blurring between them, but yes, considering the current pandemic situation as well, cards, since they have some kind of touch experience that is involved in them, and mobile wallets and UPI payment systems being completely contactless, they have an edge over them. And as per me, this trend will continue. And now people have started adopting. So even if I have to give a local example, whenever now I go to buy a grocery from a nearby store or in the local sabji mandi market, most of these small time vendors or local traders, all of them have started using some form of digital payments, be it Paytm, Bharat Pay, Amazon Pay, so on and so forth. Because now they have also started embracing, realizing that and it's purely a customer demand that they are catering to. Since the customer has that kind of a demand, and they want to be safe, they want to have minimal contact with the people around them, or when they are going into the market, that is what is driving the entire ecosystem. And hence, in the near future, I see that there will be a lot more usage of mobile payments or UPI payments as compared to cards. But yes, cards are also not going anywhere in the future.
Okay, that's very much interesting. Ms. Mohua, would you like to add some points on that? Where do you see the card economy versus wallet? Yeah.
Right. So I would say that, till UPI becomes an enabler for high value payments, cards is going to stay in the market. Because I think the trust factor on, even and when it is enabled, that we can use a UPI for instantly making a large value payment. People are still using it for a substantially low value payments, I would say, where you're going to your groceries, you're doing your shopping, etc. To a limit, they would do that. But if they have to do a high value transaction on UPI, even if it is enabled, I think the whole factor that you may make a mistake and a wrong transaction gets hit for some of the users, and the entire process of that resolution of refund is still dependent upon who's the bank behind it and all of those aspects, right? So from that perspective, I would still say people have faith on Visa, MasterCard, and Rupay from that network perspective, and their experience in terms of using cards for a long time. So I would surely say cards are here to stay for large value payments.
That's interesting. Mr. Sharma, what do you think about this transformation?
Yeah, I mean, I think yeah. So I think as we discussed, the bigger problem or bigger elephant in the room is 80% of all transactions are still done with cash, right? So I think overall what we will probably see in few years and few decades is less and less cash and more electronic payments, and that will be both cards and non-cards. But I think that is, and within electronic payments, I think the more interesting question is, I think, is the payment happening on the cloud or is it happening on a hardware, right? I think that is where I think it's less about the form factor, whether you are using a piece of plastic or a phone, or a QR code. It's really about how do you leverage technology, which is unlimited compute power on the cloud and so on, so to be able to process payments, etc., at high scale, low cost, and with great user experiences. One of the benefits, obviously, of some of this thing is the marginal cost of distribution, both on the acquiring the retailer side and the consumer side, becomes very, very low, because it's all software. QR code is just like you can take a printout, and similarly you can download an app on the phone. Everybody has a phone, everybody has internet. Unlike a credit card, where it costs to integrate a hardware and actually buy it, and similarly, piece of plastic to people has its own operating cost, right? So, I think there are markets where I think both will increase, and then I think overall what we'll see is more and more electronic payments and less cash.
That's interesting as well. So I think we have absorbed a lot of fintech knowledge by now, and we would be happy to have even more. But yeah, time tells us we need to come back again with our incredible speakers and lovely audience. So this is the time if anyone of our audience would like to ask a question. I'll just check. Okay, we have a question on cybersecurity. So how much important or cybersecurity is deployed in banking environment? How much our data is safe with apps located outside countries and jurisdiction? For example, one app in India may or may not be safe in other country, vice versa. What do you think on that? I would go with Mr. Sharma first.
Yeah, I mean, so first of all, regardless of which country you're in, we are all in a data economy, right? So data is kind of the reality of the world, the reality of the connected world, the reality of the internet world. The second reality is we're all using data to build better products, right? Safer products, reduce fraud, reduce everything. At the same time, data is very sensitive, meaning people want to steal it, and there is all sorts of situations because of which there are regulatory structures around the world which are basically making sure data is protected and so on, right? So therefore, the aspects of data ownership and data security is a global, globally relevant problem statement than just India. And I think, I think everybody is, very much cognizant of that around the world in India, whether it's a bank or fintech companies, or even other companies that have nothing to do with finance. Everybody has data, and therefore data has to be protected. Data has to be safe. Data has to be used with consent. There is personal data and so on, right? So data is I think one of the most important issues of this decade, and I think how safely it is saved and how it is used and how it is used for the benefit of the consumer and what rights consumer have are, to me, the most important aspects of data currently as we speak, and I think in the future. And I think consumers now know a lot more about permissions and terms and conditions and all of that. So I think that's a very important issue. I think companies have opportunity to differentiate themselves by being more sensitive to consumers' expectation around how their data is used, how it is saved, and how secure it is.
What is your take on that, Ms. Mohua, on the cybersecurity, especially in banking environment?
So I think extending to what just Nitya mentioned, right? More and more emphasis in terms of where the data is residing is not what people are thinking about, because there's a lot of cloud adoption that's happening in the current environment, right? People are moving away from on-prem kind of an infrastructure because of the looking at as to how to maintain it, how they protect it, etc. So banks are applying the required consent mechanism, the required security protocols to ensure that data that is supposed to be visible to people with the consent of the customers are visible, and data which is not required to be shared, etc., is not made available to others from either from an economic perspective or whatever be the means. So this whole concept of aggregator that is coming up in India is actually going to help further in terms of ensuring data privacy under the specific laws. So that's how the banks are going to work towards it.
That's interesting. And for Mr. Rana, yes, there's a question. What do you think about implementation of e-cash vouchers, barcode payments at POS payment solution in India? On that, what is your take on that?
Sorry, Ajay, I just missed the question.
Okay, so this is a question on e-cash on the vouchers or barcode payments in India at POS. So where this transformation is going, what is your take on that?
So see, in terms of e-cash or barcode payments that we are talking about, see, a lot of loyalty solutions are being built on such platforms. If we have to talk about. So especially if we talk about these e-cash vouchers or the vouchers that are there. We had started with physical vouchers, if you remember, about Sodexo and all such methods that were there in the market. Now all of them have been digitized, and now it's a different form factor that is being used. So it's the same methodology, but with a different form factor that is being used. And a lot of it is also driven by the loyalty system or loyalty integration built around it. So if, say, suppose I'm a member of a particular bank or a particular I'm a loyalty member of some particular organization, then they issue these loyalty cards or e-vouchers for me to get them redeemed at specific outlets or specific locations. So if we have to consider about these specific e-cash or e-vouchers, then these vouchers are completely safe. And in terms of data privacy as well, there's no such data breach that is involved in them, especially because whenever you are involving or you get into a loyalty system, then you first have to log in or you have to acknowledge the details that you want to furnish, and basis that only you get or you enter into a loyalty system. So it's a completely fair, transparent system that you get into, and then through that system, if you are entering, then it's completely safe for you.
Yep, I totally agree with you. And Mr. Sharma, do you think post-pandemic time would play a crucial role in fintech, especially in India, after we are kind of forced to use digital payment as the only payment solution? What is your take on that?
Yeah, I mean, look, that's true, right? Already there was a trend, as I mentioned earlier, of people going less and less to bank branches or even buying things outside, and people were moving to handling their money online and buying things online, etc. And then pandemic has definitely completely rebooted the whole thing, and going to a bank branch is clearly unsafe. And obviously banks are responding by creating better and better mobile applications and giving less and less reasons to actually go to the branch. Which overall is great for bank profitability, right? Because a big cost structure is retail branches, and people just had the habit of going to branches. And while fewer and fewer people were going to branches, but you still need the branch because you will lose customers otherwise. So there was this trend of having these branches. I think I'm sure so many few people go to the branches now, and I'm sure banks are thinking about how do they service the customer, give them all the things they need, at the same time start reducing the branch footprint, so that and then invest more in information technology, mobile applications, internet, and so on, and internet-based services. And to me, it's very clear. Pretty much everything is happening that was supposed to happen in 5 years, happened in the last 9 months. And I think the next 9 to 12 months will be very, very interesting, because the previous 9 months were a little bit chaotic, right? We were all running around. We had no idea what's going on. And like maybe in 1 month, everything is fine. Everybody's waiting for the next month. And now I think people have adapted to this new reality. It's okay. and people are taking sufficient precautions, and people have a sense of how risky and how not risky things are, and as long as you're wearing the mask and so on. So, I think people are slightly more at ease, and at the same time, people have definitely adopted digitization, right? Whether it's entertainment, communication, banking, finance, and so on, right? So, yeah, I think that's a very important trend that was catalyzed by COVID.
Yes, Ms. Mohua, do you think post-pandemic world would be more open to or more receptive to the digital economy? And where do you see this, sudden transformation happen due to a natural disaster?
So I think yes, very much. We've realized from the situation that given that how the entire travel industry got impacted and people still managed to do a lot of business, we believe that all these the situations that people have gone through and learned over the period is going to only act as accelerators to further improve the digital economy. Whether it is branchless banking or neobanks or the entire trade process being looked at by the government itself through single window initiatives where they're trying to make everything paperless, or bring in regulations which are going to help people to look at more and more things which they were doing practically going into the branch, like even checks. If you look at it, with the whole aspect of positive pay being brought into the market in India, they are giving those levers for us to move towards a complete digital economy. It will take time, yes, because it is about how the unbanked population can be made aware and made fair. They feel secure about it. So it's about the customer experience for us to actually reach that particular milestone. So yes, it is accelerating, but we still have a long way to go.
That's great. Mr. Rana, we all have seen, demonetization happening and Paytm coming on front of digital revolution. What do you think after this pandemic, post-pandemic economy looks like?
See, post-pandemic, as the other panelists said, now in the last 8 to 10 months, we all have become accustomed to the kind of environment that we have to continue to live in, as well as we have now adopted ourselves to this new normal and started embracing technology. So even worldwide, if we have to see these days, and these Amazons and Apples of the world crossing trillions of dollars of market cap, so that in itself is also an indicator of the kind of confidence people are building on tech-based systems or technologies. Now people have started embracing all such different types of technology providers or technology instruments or the facilitators. More so because now they realize that in a post-pandemic world, people and all of us would have to, in some way or the other, rely on technology. Be it in terms of having a cashless payment system, be it in terms of having a cashless or a contactless delivery system, in terms of having minimal contact with people and getting your work done. So all these things are now leading all of us into a direction wherein in a post-pandemic world, all of us have now started embracing technology first. Second, all of us have now realized that there is some level of change that is required amongst all of us to do things little differently of what we were doing 8 to 10 months back. So be it in terms of our purchasing behavior, in terms of our making payments, in terms of planning out different things, all of it has changed in the last 10 months, and the next 10 months is just about like leveraging on that experience which we have gained in the last 10 months and capitalizing on that to further consolidate ourselves, so that even in a post-pandemic world, which still seems to be uncertain for a longer period of time, how can we sustain during these uncertain times?
And I think the e-transaction in India by card and mobile wallet, gone huge versus to cash economy already. There was one question on same lines, so I think you already answered that. So do you think this will lead to the more open and accessible economy for all, not just tier 1, tier 2, or maybe people getting subsidy from their Jan Dhan account, or Indian government doing, touching a lot of people in terms of opening their bank account, digitizing them and all?
See,
Mr. Rana?
as I had as I'd already mentioned, the government already has tried to build a huge infrastructure around providing not just accessibility but affordability and trying to reach to the lowest rung of the people. So that has been done by the bank. Now it is up to all of us, all players, be it in the larger private corporate houses or the smaller fintech companies or any other innovative companies across India. How can we take leverage of those systems that the government has built and take on that and build solutions which are accessible, affordable, and available for all of us, not just the metros, tier 1 and tier 2 people, but also into the people who reside tier 3 and below. Because as per my experience, and I've conducted surveys on this as well, that if you go to cities tier 2 and below, people and merchants, both of them are now highly aspirational. They are not completely digital. They are not completely driven by the cash economy. So they are somewhere in between, and they have that aspiration to reach there. The only thing is they still have certain inhibitions. How can we address them? How can we build on the experience? How can we deal with questions like privacy? So of late, we've seen questions around being raised on social media platforms about their privacy factors and all. How can all these be addressed? How can people be comforted that your data resides in India, your data is completely safe, and then help them in adopting all these new age technology solutions as well as payment systems?
Thank you very much, Mr. Rana. Mr. Sharma, we have a question on collaboration, not with the government, with the startups. So how much open you are as an Indian fintech startup to collaborate with the banks and technology transfer, especially from Austria? You know, if somebody is trying to get or share the same ecosystem in India, how much open and willingness you see from the Indian startup side, especially in fintech? Let's say on technology collaboration.
Yeah. I mean, like I can't say on behalf of everyone else, but at least on our end, we believe in the ecosystem approach. We collaborate with a lot of technology companies and payment companies and banks and so on to be able to again deliver a valuable service to our customers, and our customers are retailers and consumers. So yeah, I mean, we are always, at least on our end, we are always open to collaborating, learning, developing, co-developing, etc. And I'm sure other startups in India are of the same mindset as well.
That's great. That's great. So that's the panel discussion. We have to end it now on the sweet note that we are open for collaboration and Indian fintech ecosystem looks good. Come and join us. I will say thank you for all the panelists. Thanks for your time. Thanks for your valuable suggestion, feedback, and your answers. Now I would like to request Dr. Luke for his comments and thanks note. And thank you all the speakers and the participants. Thank you very much.
Thank you very much, Ajay. Thank you very much to our panelists and to our keynote speaker. It was indeed a very lively discussion, a wonderful keynote, and I think there are a number of takeaways that we will consider and should be considered by our Austrian participants. I would like to mention that 80% of all transactions in India are still in cash. So this really, despite on all these technologies and advancements and innovations, there is a tremendous room for more transactions between Austrian companies and Indian companies in the fintech sector. So I think this is really an amazing market opportunity for our Austrian companies. Also, there has been mentioned that the new technologies enhance partnerships and really make partnerships necessary. I think this is also a very important takeaway for our Austrian companies. I would like to mention also very briefly the lockdown, COVID. COVID has been mentioned also as a catalyst and accelerator for technological innovation, especially in the fintech sector. And this is certainly true for India. And again, you have to consider, take into account India's population, almost 1.4 billion people. This really brings tremendous challenges for these companies who are operating here and developing new solutions. And I think this will have an impact really globally. And as you can see, when you look how many Indian nationals are operating as CEOs in the big corporations like Google and Microsoft, the CEOs and especially people from the R&D sector are mostly Indians, and which this fact made it also easier for them to cooperate on a global basis. So India, I think, is really, when it comes to IT technologies, a truly globalized country. COVID, ladies and gentlemen, has impacted India greatly as all other countries, but nevertheless, India started also the biggest vaccination campaign worldwide. Within the next few months, it plans really to vaccinate the entire population. 5,000 vaccination centers have been established all over the country, and it has been really planned thoroughly. And I think this is the only way out for us from this epidemic, which held almost for a year a very tight grip on us and also on the economies. Here, ladies and gentlemen, you see on this chart our upcoming webinars. We plan in the near future, the not too distant future, webinars, because we don't know yet when we can switch back to analog events. The next one will be on the 16th of March. A webinar for Austrian startups. They will participate in the big event, India Innovation Challenge. So this will be very, very exciting. In April 22nd, a webinar for Austrian companies who are interested in outsourcing their IT demands. So an opportunity for them to make contacts. The next two events in May and following 2 weeks later only, incoming mission artificial intelligence, a big conference being held in Vienna, and we hope we can bring some experts from India to this event as well to the B2B software days. And finally, in August, we are planning a webinar on e-mobility in India. As you know, India has a very advanced and strong automotive sector, and they seem also very innovative in new driving, developing new driving trains, switching to electrical, but also to managed traffic. Our latest news, ladies and gentlemen, can be, as always, for all of those who are not familiar yet, can be watched and see on wko/außenwirtschaft/in, and of course the YouTube channel. Again, all the entire presentation will be sent to you along with the link to the recording of the entire seminar. And finally, ladies and gentlemen, I would like to end with a global note. I would like to lead you to our last slide. I hope I can pull it up. Yeah, here it is. We have our headquarters has developed a new website. It's called the Export Radar. For those companies who are interested to look into other markets. You simply can click on the market you wish to get information from. It will give you an overview where the opportunities are, an overview about the economy. So a very exciting and easy tool to use. With this, ladies and gentlemen, again, a great thank to our keynote speaker and our panelists and our viewers. I hope it was of interest to you, and I hope to see you at our next webinar. Thank you very much, and bye-bye.